$5,000 happened this year for gold, and ever since then it's corrected about 30%. Silver dropped about 40%. This looks like the beginning of a 2012 style crash, is the analysis of a lot of people on my show. Is that your view?
No, it's not really our view. I mean, we've done that, and a lot of our clients have been asking, so were these the peaks? And partly it was because we were saying that we thought gold, silver would peak around the period 2024, 2027. When we saw the prices rise as sharply as they did, the natural thing is, okay, is this a cyclical peak? And do we go into either a 2012, 2013 decline, 1980, 81 type of decline? You've seen it over and over again. And our answer, our discussion, our analysis is that no, we're not there. That this is more of a temporary type of thing, similar in some ways to what we saw in the middle of 2025. If you go back to 2025 and you look at it, prices were very strong in the first 3 or 4 months of the year. Then they basically consolidated in a sideways pattern from April, May into and through August. And then at the end of August, they started rising, and they rose very sharply from the end of August until the end of January. And we're looking at 2026 as more like 2025 than 2012 or 2012, 2013. So we're looking at this as a decline from very high levels into a very volatile sideways consolidation period for gold and silver, with a downward bias, which we've seen over the course of April, May, February through June. So we're looking at what we're seeing in terms of recent price weakness in gold and silver as just moving into a volatile sideways consolidation pattern. And our expectation is that the prices will start rising again in the final 4 months of this year into 2027, because the macroeconomic and political environment that drives investment demand hasn't gotten better. And our expectation is that while there has been some temporary improvement economically and politically, we think that by September things get worse again.